Greetings, my name is Kevin Matthews and I am the tax professor. Welcome back to class. Remember, class was never out of session because the learning never stops. And so today we're going to kind of talk a little bit about the cancellation of student loans. Now I know I read about this all in the papers. Look, full disclosure, I have student loans and they're not fun. I don't enjoy them. I don't think anybody ever enjoys them. Of course, if it wasn't for loans, I would never get my education and I'd probably still be working in the restaurant industry. Not that that would be bad. I do enjoy my good cooking all the time and all that stuff, and maybe others would enjoy it too, but I'm very happy doing what I do for a living, and if it wasn't for the ability to borrow in order to go to school, I wouldn't be able to do it. And so, but what ends up happening is, now why would people have cancellation of student loans? There's actually several reasons why this may happen. It could be pursuant to a bankruptcy. Very, very difficult, I will tell you. I've had a friend who went through bankruptcy, tried to get some student loans cleared out. It required a lot more work. And generally, especially because they were federal back loans, the federal government doesn't like people to go to bankruptcy and clear out their student loan debt. And so they're going to make it very difficult in order for you to be able to do that. Can it happen? Yeah, it can. I've actually seen it. Other reasons why you may have it. There are some people who are involved in these payment programs. So one of the ways that you can do it is that they have pay based on your ability. So what happens is they take your income, figure out what your income is, and then as your income changes over from year to year, they're going to change how much your payment is going to be on your student loan interest or student loan debt. And so what ends up happening is that'll change over time. But once you hit a certain time limit, and I believe it's 20 years for most people, and then if you work for the federal government, it's 10 years. What they'll do is they'll go ahead and they'll cancel out your they'll cancel out your student loan debt. Now, there's a third way that I know of, and this one I've actually met some friends who've actually taken advantage of it. Veterans who are rated as 100% permanent and total disabled can actually get their student loans wiped out too. And part of the reason for that is they're basically, look, the military completely broke you. You can't go out and make a ton of money like you would have otherwise. And so as a result of which, the United States government's going to take care of that loan debt for you. Now, I know that when you get that first letter and it basically says, hey, your student loan debts are wiped out, the first thing you're thinking is, gosh, I'm glad that I don't have to make that next payment. The last thing that most people are thinking about is, what's the tax effect of this? Now, forget student loan debt for 5 seconds. Let's talk about general debt overall. Under the tax laws, if you have cancellation of debt, you effectively have income. And if you think about it, it works kind of like this. So if I go to the bank and I borrow $1 million and they give me $1 million, okay, and I go use that $1 million to start a business, and everything's going fine, I don't have to pay taxes on that $1 million that I get from the bank. That would be kind of ludicrous, wouldn't it, if you go borrow money from a bank and you have to pay taxes on it? And that's one reason why when you pay the loan back, principal payments aren't deductible, because you didn't get any income off of it. Now, and just go to La Land for a couple seconds. If I went to a bank, borrowed $400,000, had to recognize taxable income of $400,000, payment of that money back would be considered a tax deductible event under tax theory, okay? Now, obviously that doesn't happen because, again, the receipt of the loan proceeds is not considered income. Now, let's take for a second, though, you no longer can pay that loan back. I borrowed $1 million, started my own business, it went and it's done. Okay, knock on wood, hopefully that doesn't happen to me as a small business owner, but it dies. And I go to the bank and say, sorry, go to bankruptcy and I can't pay that back. Now, for moments, just say I don't go to bankruptcy. But the bank comes back and basically says, well, we kind of figured this was going to happen when we risk this out. Now, of course, no bank's ever going to say that. They're going to be like, we're going to take everything from you. But basically what will end up happening is they may cancel that debt. And so effectively, as far as the IRS is concerned, you just received $1 million and didn't pay any taxes on it. And so now they're going to make you pay taxes on it. Now, there's certain debt that is dischargeable and is not taxable when it's discharged. Now, we're not going to talk about a lot of that because I know that there's been significant changes in that, and so I want to talk about that in a different video. But in one area is actually cancellation of student loans. Now, basically, if you are a person who gets a cancellation of student loans, you're going to have to pick up that. You would normally have to pick that up in income, but if your student loan debt qualifies for one of the exceptions we outlined earlier in this video, you're not going to have to pick it up in income. Now, there is one other that I didn't mention in the video earlier, and that is the death or disability exception. Now, I talked about disability, but I didn't really talk about death. One of the aspects of federal student loans, I have student loan debt. If I walk out on the street and I walk in front of a bus and I get hit by a bus and I'm dead, my wife doesn't have to pay those student loans back because they're my student loans. My wife actually went to college in another country where they don't have the student loan concept and they have to pay for it out of pocket. So if that happens, obviously I'm dead. I mean, it's not like I'm going to walk in front of a bus in order to be able to cancel my student loans. Essentially what the government basically says is, look, he's dead. You can't pay him back because he's dead. So we're going to go ahead and we're going to allow him to exempt that. So if you have all of that canceled, what ends up happening is you don't have to report it in income. You won't, you'll probably receive a letter saying your student loans have been, deleted. They'll be removed from your, from your credit report. Well, no, not totally removed from your credit report. They'll be listed as paid off on your credit report, or charged off, and then you just kind of go on as it is. So we talked about earlier the public work exemption, and one of the things that they talk about with the public work exemption is that if you work for a certain period of time in certain professions for any broad class of employers, for example, doctor for a public hospital in a rural area, cancellation of your debt is contingent on you fulfilling this type of requirement. You won't have any income when the debt is canceled because you perform the required services. I think of another very good example of this is that if you're a teacher and you agree to teach in a low income neighborhood, sometimes and it qualifies for that exception, what they'll end up doing is they'll say, hey, look, we're going to let you, if you work in this downtrodden neighborhood, we're going to let you go ahead and we're going to charge off your student loans. You're not going to pick that up because you're actually doing a service for them. We also talk a little bit about this, and this especially, here in the Washington, D.C. metro area, the federal government does have that thing that says, hey, look, you come work for us for 10 years, we'll charge off all your student loans, and then you're done. And I do actually have a few clients that I think the whole reason why they're working for the federal government is because they want to get those student loans charged off. So loans that are made by tax-exempt educational institutions that are private non-government funds may also qualify, but only if the loan is imposes a public service requirement. I've actually not dealt with this personally. I've never had anybody ask me about it. I think it's fascinating. It's probably something I want to ask my clients going forward, but it's definitely something you should probably be asking your CPA about if there's a discharge requirement as a part of a public service. I know that there were several banks, Sallie Mae in the old days used to do a lot of private loans. In fact, I think I still have a few of those, but they've gotten sold, like 3 or 4 different people. And so as a result of which, I don't know if there's a public service requirement in any of those, but it's definitely worth checking out to see if it's something that would work for you. So if you actually do work for a public services, for an education institution, and they cancel your student loans, you will have to recognize that as income. So for example, if they say, look, Kevin, you graduated with your doctorate degree, congratulations, Dr. Matthews, which I'm hopefully will happen to me sometime in the near future, and they say, Kevin, come work for us here at the University of New Hampshire or whatever. Why don't, we'll make you a leader in this institution, and if you come work for us and you work for us for 4 years or longer, we'll cancel all your student debt. Okay, in that case, I'm still going to have to pay taxes on it because that's not really a public service requirement that really is helpful for the public at large, and especially because, and I think that the reason why they're making the exception on that is, or not making the exception on that is, I'm making good money. I'm not working in a hazardous area. I'm not working in an area that I wouldn't want to go to otherwise. but you know, there's just no public benefit that they see that is warranted of a discharge. So I talk about the discharges after 2017 and before 2026. An individual's gross income doesn't include any amount from discharge of a student loan where the discharge is made under certain federal statutes, was otherwise discharged on account of student of death or total permanent disability of the student. Okay, so if you fit into one of those circumstances, you probably need to reach out to your CPA and make sure that it's not income. Look, we're going to really understand these rules, and we're going to be able to sit down with you and your individual rules. These webinars are not really to give you the final answer, but to sort of give you the juice to kind of get the questions asked that you should be going and asking your tax preparer. Again, my name is Kevin Matthews, and I want to thank you for watching these videos. I am the tax professor. Class is not out of session because remember, the learning never stops. If you want to go ahead and you want to talk to me about any of this stuff, leave a comment in the comment box below, or you can reach out to me at my website at www.betasolutionscpa.com. Again, that's www.betasolutionscpa.com, and I'll be happy to talk to you through my info box and address your specific circumstance. Again, thank you very much.